All right, let's talk about Hut 8's recent third-quarter earnings call. This one was a real head-scratcher. It served up this fascinating paradox. The headline numbers looked absolutely incredible, but the market's reaction, not so much. So, let's dive in and figure out what exactly happened here.
And this is the central mystery, right? You look at the numbers, Hut 8 delivered a massive beat on revenue and on earnings. But instead of a pop, the stock got hammered in pre-market trading right after the announcement. So what in the world did the market see that wasn't in those headlines?
Okay, let's start with the good news because, wow, it was really good. Hut 8 reported Q3 revenue of $83.5 million. I mean, this wasn't just a beat. They crushed the consensus estimate, which was sitting way down around 65 to 68 million.
And get this, that 83.5 million, that's a 91% increase from the same time last year. A huge jump. So you see numbers like these and you're thinking party time, right? Well, apparently not a celebration, but a sell-off.
So here's how we're going to solve this little paradox. First, we'll look at their big power play vision. That's the bull case. Then we're going to read the fine print, find out what spooked investors. And finally, we'll wrap it all up with our analyst take in a segment we call The Next Call.
All right, so to really get the bull case, you have to understand the grand vision management was painting for investors on the earnings call. And it all comes down to this idea they call their power play. Okay, so the key message here, and you really got to get this, is that management wants you to forget about Hut 8 as just a Bitcoin miner. They are pitching the company as a power-first energy company. The whole idea is that whether it's mining Bitcoin or powering the next wave of AI data centers, the real value, the real bottleneck is controlling the power.
And their game plan to pull this off, they call it the development flywheel. It's basically their four-step process for turning power into money. They find the power assets, they invest to build them out, they monetize them with long-term contracts, and then they optimize everything. It's their roadmap for turning megawatts into real, recurring revenue.
And this number, wow, this shows you just how big they're thinking. The crown jewel of their strategy is a massive 1,530 megawatt expansion project across 4 different sites in the US. And look, this isn't just a dream on a whiteboard. They're officially calling this energy capacity under development. That's a signal that these projects are for real and moving forward. Now, a really clever piece of this whole pivot was spinning out their crypto mining business into a separate unit called American Bitcoin, or ABTC. This is a smart move. It does 2 things. 1, it fences off the super volatile Bitcoin mining business, and 2, it lets the main company, Hut 8, focus on stuff like data centers, which can get money from investors a lot cheaper.
Okay, so that's the shiny, exciting story management is selling. Sounds pretty compelling, right? But now it's time to dig into that fine print and understand why the market just wasn't buying it.
Remember that big $83.5 million revenue number? Well, when you actually slice it up, this is what you see. A whopping 70 million of it, that's like 84%, came from just one segment, compute. And guess what's in the compute segment? Yep, almost all of it is just their Bitcoin mining business. So for all the talk about being this diversified energy company, the reality, this quarter at least, is they're still very much a Bitcoin miner.
And here it is. This is the smoking gun, folks. The reason their bottom line, their profit, looked so good was this: a $76.6 million paper gain on the value of their Bitcoin holdings. This isn't cash profit from operations. It's an accounting gain because the price of Bitcoin went up. And you can bet savvy investors saw right through that.
So this right here, this sums up the whole conflict, doesn't it? On one side, you've got management telling this awesome story about a long-term transformation into an energy giant for the AI revolution. But on the other side, you have the market looking at the here and now and saying, hold on, your profit just came from Bitcoin going up, and that 1.5 gigawatt plan, that's a huge risk. So when you boil it all down, these were the big worries that sent the stock tumbling. Can they really pull off a build-out of this scale? Where are they going to get the billions of dollars needed to do it? And hey, what happens to their profits if Bitcoin's price goes down next quarter? These are the tough questions the market was asking.
All right, we've heard the bull case, we've heard the bear case. So what's our take here at Talk Tickers? What should you be looking for on the next earnings call? Okay, here's the official Talk Tickers verdict. We are initiating coverage on Hut 8 with a market perform rating. Here's why. For next quarter, we think revenue is going to come back to earth as those one-time gains disappear. That's going to put all the focus on their actual execution. The stock itself is probably going to be a tug-of-war between Bitcoin hype and AI hype. And until they sign a major tangible power contract, expect a bumpy ride. The potential is huge, but so are the risks.
So if you wanted to play this, how could you do it? Well, we see this as a pure bet on volatility and execution. One idea could be a long-dated, out-of-the-money call spread, say 12 or 18 months out. It's a strategy that lets you capture that massive upside if they land a huge deal, but it also limits your risk and caps what you have to pay up front. It's a bet that management can deliver, but you give yourself a deadline.
And of course, we have to say this, our analysis is for informational purposes only. This is not financial advice.